Okay, so this is Tax Tips for Dentists, and I am Jessica Chisholm, CPA here at Huddleston Tax CPAs. So the things I'm going to go over today are entity selection, the auto deduction, home office deduction, dental equipment buying versus leasing, which is best for tax purposes, hiring family members, deferring taxes, payroll taxes on owners, and then some other miscellaneous deductions to remember. So first, with the business entity selection, when it comes to choosing the best entity for your business, there are several different choices. So the different entity choices you have are sole proprietorship, LLC, partnership, C corporation, and the S corporation. So the sole proprietorship is the easiest to start, but it also, you have to pay self-employment tax on all of the profits. For most years, that's 15.3%. For 2011, with the lowered Social Security rate, would be 13.3%. And then the sole proprietorship, it just gets reported on your Schedule C of your personal Form 1040, so there's no need for any extra tax returns to be prepared when you're sole proprietorship.
Okay.
For the LLC, a single member LLC would be taxed as a sole proprietorship, or could make an election to be taxed as an S corporation. If you're a multi-member LLC, then you need to report the income on the partnership Form 1065. So a single member LLC, when you don't make the election to be an S corporation, you are just taxed as a sole proprietor, and you just still pay that self-employment tax on all of the profits. If you make the election to be taxed as an S corporation, then you get all the benefits of being an S corporation for tax purposes, and I will talk about the S corporation in just a second. If you're a partnership, there's 2 or more owners sharing in the profits and losses, then you would report your income on the partnership Form 1065. And again, and the partnership income flows through onto your personal tax return with a K-1, so there's no tax paid at the partnership level. But all of that flow through income when you're a general partner is subject to self-employment tax as well. And then there's the C corporation. The C corporation pays tax at the corporate level, and then if you're an owner and you take dividends out, you're taxed again on those dividends. So when people talk about double taxation, they're talking about C corporations. And the only ways to get money out of the C corporation as an owner would be to take a wage or to take dividends. And either way, you're taxed personally on that income again. Then there's the S corporation. It avoids the double taxation of the C corporation because it's also, like the partnership, a flow-through entity. So there's no tax on the S corporation. All the income flows through onto your personal Form 1040 using a K-1, and you're taxed on the personal level. There also is a way to save on the self-employment tax with the S corporation. So when you become an S corporation, the IRS requires you to pay yourself a reasonable wage out of the corporation when you're an owner. So, for example, an easy way, a way to think about what a reasonable wage would be is what you would need to pay someone to replace yourself in a business. So if you're a dentist and you have a dental practice, you would need to pay yourself a wage that would be reasonable to what you would pay another dentist to work in your practice.
Okay.
So the way you would save on self-employment tax is if you had, say, a net income of $100,000 for the year, and you decided that a reasonable wage would be $75,000, then there would be that $25,000 difference between your wage and the profit. And you could take that $25,000 as a draw out of the corporation, and that $25,000 would not be subject to self-employment tax. So you have to think about at what point the S corporation makes more sense for you. But for more details on how S corporations can save you money on taxes, John Huddleston, and another CPA here, does a webcast called LLCs and S Corps Explained, using them to reduce taxes. So if you have any questions on entity selection, that's a really great webcast to check out because he goes into it in a lot of detail. Okay, so the next thing I'm going to go over is the auto deduction. So there are 2 different auto deduction methods. There's the standard mileage deduction and the actual expense method. The standard mileage deduction is the easiest to take.